You know that you need to be investing in the stock market, but you don't even know where to go. You don't want to buy individual stocks, and you've heard of ETFs, but you don't know what they are, and you definitely don't trust yourself to build a customized ETF portfolio. So then what do? Well, the good news is that you don't have to do this on your own. There are investment platforms out there that make it stupid easy to get started investing in the stock market. So today we're going to look at what is one of the most prominent and largest robo-advisors that exist. We're going to do a deep dive and answer all your questions about them and a whole lot more. Are you ready? Let's go. What is going on, GFC fam and Wealth Hacker Nation? It is time to make your life more. It's your boy, it's your always grateful, always cheerful host, Jeff Rose. And today what we're doing is we're looking at a very popular investment platform. This is a platform that is near and dear to my heart because this platform actually started whenever I started my blog back in 2008. That's how long this platform has been around. And what we're talking about is Betterment. Many people have heard of Betterment. Many people haven't. They have become quite a giant within the online investing space, which is pretty incredible when you think about all the different platforms that exist out there, especially nowadays. I mean, back then there wasn't as much competition. Like Robo-Advisor was still a new term, but now you have all these different investment apps such as like Robinhood, M1 Finance, Acorn, Stash. I mean, the list goes on and on. So today we're going to look at who is Betterment. We're going to talk about some of Betterment's costs, their features, the types of accounts that you can open with them. We're going to look at their investment portfolio options. Also talk about who is Betterment best for. Are they better for certain types of investors? We're going to answer that. We're also going to answer or look at what really makes them different. They have a unique offering with one of their service platforms, which I think just is a testament of how they've taken the online space and tied that into real life brick and mortar type feel. And you'll see what I mean when we get to that. And for those that are watching this on the Good Financial Sense YouTube channel, you'll also be able to see a behind the scenes look at my Betterment account. Well, technically it's not my account, it's my wife's account, but I'm going to share with you and show you like, what does it look like to have a Betterment account? What are all the different tools and features that they offer? And you'll get a chance to see what fintech really looks like. Financial technology, I mean, their interface is one of the most beautiful, especially compared to some of those old school OG platforms like TD Ameritrade and Ally Invest. Like, they're okay. They just feel a bit dated. So when you see Betterment's platform, like, you're going to see, wow, this is very intuitive. It has everything that you need, but it just looks sexy. So what exactly is Betterment? Betterment was one of those first platforms. It might have been the first platform to coin the phrase robo-advisor. Essentially, you're hiring not a real person, you're hiring a robot. I mean, AI, advanced, artificial intelligence, that's basically putting together a portfolio based on your goals and needs, but it does it for you automatically. And I mean, this has definitely evolved. Like, this is back in 2008, like when this is like a thing, right? This is kind of like when the internet first came out and people were like, whoa, the internet. That's kind of what Robo-Advisor was back in 2008. Nowadays it's much more common. You hear it a lot more. Even the bigger platforms like Fidelity and TD Ameritrade, which I mentioned earlier, like they offer Robo-Advisor type investment platforms in their platform as well. But Betterment is one of those ones that really led the charge in creating this. So as I mentioned earlier, Betterment was founded in 2008. So they've been around for a good amount of time. Now, another metric that people will look at, well, how big are they? How much do they manage? And you can go to Wikipedia and you'll see exactly how much they manage. And it's not in the millions. It's in the billions, as in $33 billion. Like, that's how much they're managing. Now, that is at the end of 2021. I have to assume with the market pullback here in 2022, it's less than $33 billion, but it's still in the billions. They're currently they currently have over 700,000 customer accounts. So they are not just some new startup that, they're just fledgling, barely making it. I mean, they've got a good amount of assets. They've got a huge customer base, which is a testament of their technology and what they offer. I mean, people trust them. They make it super easy, just everything that you would want in an investment platform. Now, one interesting thing about the size of Betterment, over $33 billion, what's very interesting is that I actually had a chance to meet the former founder and CEO, John Stein, at a conference. And this is going back, I think it was in 2009, 2010. So they were brand new, still trying to make waves, and just get in the fintech space. And at that time, I remember in that interview, they had about 40 million in investable assets. So that's how far they have grown. Like, that is just insane. Like, how much go from 40 million to 33 billion, what they're at today. So just kind of fun, like, to be able to talk to them at the end, like, oh, and I remember talking and thinking, oh, are they really going to make it? Because I knew what they were charging, because it's not just the Robo-Advisor offering that they have, it's also the pricing. So let's talk a little bit about the pricing. And this is a big deal. So with their pricing, when you look at how much they are charging for what you get, they have a starter platform that basically will charge you nothing. Now, with this platform, the no fee platform, you don't really get access to their investment side, but you do get access to their banking side. So you have the checking, the ATM fees, FDIC insurance up to $250,000. Now, for most people, like, this is not going to be of interest, but let's talk about what really set them apart. Was this one here, the middle one. So there's two different pricing plans. Let's talk about the most common one, which is the 0.25% annual fee. 0.25% annual fee. With that, you are getting low-cost investing portfolios built and managed based on your priorities. You are also getting socially responsible investing options. You're going to get account choices, including joint accounts, IRAs, and trusts. You're going to get automatic features like portfolio rebalancing, dividend reinvestment, auto adjust, advanced tax loss strategies like tax loss harvesting and asset location. Also throw in that checking and cash reserve with no additional fees. Zero minimum balance, and then $2.50 a year for every $1,000 that you invest. Like, this was and still is a big deal. So to kind of give you some context here, going back at this time, when most advisors are charging you 1% or more, like 1% was like the industry standard for the most part, but there are several advisors at the bigger wirehouse firms that are going to charge you 1.5%, maybe even up to 2%. So when advisors are charging 1% to manage your account, and you can get a diversified portfolio through Betterment for 0.25%. So basically like a 75% discount. I mean, you talk about, this was and still is a disruptor in the online investing space. Like, this is really, really one of the big things that set them apart, to charge 0.25% to get a portfolio, not just like a sit it and forget it portfolio, but to get an ongoing managed portfolio that they're going to make the adjustments for you. I mean, that was and is still a big deal. Now, sit tight on the 0.4% offering here. We're going to talk about that one here in a minute. Just talk about how that's a little bit different, and for paying 0.15 or 15 basis points above their most common offering, and what you get for that is seriously like unreal. So what about account types? What types of accounts can you open? Well, this is where they are just like most online brokerage firms. Not only can you open up an individual account, a joint account, you can also open up an IRA, whether that be a traditional or a Roth IRA. Actually, a good friend of mine, for the longest time, he had opened up a SEP IRA, which is a business retirement account. And so they offer SEP IRAs, simple IRAs, so basically anything in the IRA platform they can. Now, they also do offer 401k plans. This has something more to do with if your employer were to decide to open a Betterment 401k and offer Betterment through your plan, like they could. Now, you can't go out and open one unless you're a business owner or self-employed. Then you could set up a 401k plan and then go through Betterment. So the only way to get a Betterment 401k, it has to be a business owner or your employer has to offer that. But any type of investment account that you want, like they offer it. Let's talk a little bit now about their expert built curated portfolios. Now, initially when Betterment first came out, their portfolios were basically just ETF portfolios. But for somebody to go and that doesn't know anything about investing and have to, build a portfolio with 8 to 12 different ETFs, like that can be very overwhelming for many, and to the point where they won't even do it. Like they just I don't know how to do it. I don't know anything about ETFs. Therefore, I am not going to invest. With Betterment, they make it easy, and I'll talk a little bit about the strategy, how they get it set up. But looking at the different types of portfolios that they have their Betterment Core, Innovative Technology, Broad Impact, Climate Impact, Social Impact, Goldman Sachs Smart Beta, BlackRock Target Income. So if you actually, and this is on their website, if you want to go check this out, click on Betterment Core and you'll see the actual holdings that you would have in your portfolio and also the weights. So here we have, and these are all ETFs. So the US Value Stock Small Cap, this is symbol VBR. And just click on that. That's going to take you to the ETF, which is the Vanguard Small Cap Value ETF. So that is one ETF in this portfolio that has about has a 4.3% weight. So right now, this is the Betterment Core. You're looking at a 70% stock, 30% bonds. If you're wondering, well, how do I even know how to do that? I'll answer that here in one sec. So then you just look at, all right, we've got VEA in there. So these are all Vanguard ETF. So for those that are bogleheads, love Vanguard, love the inexpensive nature of their investment offerings, boom, like that's what you have here. In addition to that, they do have some iShares in here. I think this is, the aggregate bond index. That is an iShare. And then let's see what this one is. The International Developed Market Bond. That is also a Vanguard ETF. And you'll see the weights. Now, what I mean by the weights is, so if you were to put $100,000 in, 4.3% of that is going into this VBR stock ETF based off this allocation. So you don't have to decide that, right? Like Betterment does that for you. You put the money in, and depending on the portfolio, your risk tolerance, they'll go ahead and allocate your money accordingly. And anytime adjustments need to be made, guess who takes care of that for you? That is Betterment. And how much are they charging? Once again, that's the 0.25% to have this portfolio built for you, automatically placed into the appropriate percentages. And then ongoing, they're going to rebalance it and make any of those adjustments that are needed. Once again, for how much? 0.25%. So who is Betterment best for? And there's a variety of the type of investors that would be a good fit for what Betterment is offering. Now, when I think of Betterment, I think of somebody that doesn't want to build their own portfolios. Like they know of ETFs. They believe based off of what they have heard that ETFs are a good investment, but they do not trust themselves to go out and custom build their own ETF portfolio. So if that is the case, I mean, to me, like that is where Betterment could be a great fit. So that is like one example. Now, this also may help you determine if Betterment is a good fit, is that the way that you open your account, which is a little bit different than what you see at the traditional brokerage firm. Most brokerage firms, you tell them, all right, do you want a joint account, individual account, Roth IRA, blah, blah, blah. Then you open the account, and then you decide what investments you're going to choose. Now, with Betterment, a slight twist on that is that, you got to decide the type of account that you want to open, but then they go through a series of questions to find out, what are you trying to do? Like, what is your investment goal with this money? Or what are your investment goals? Because you may have, maybe you've got $10,000 that you want to invest, but half of that might be towards retirement, like in a Roth IRA. And the other half could be towards something more short-term, like you want to save for buying a house, like a down payment on a home or a new car or some other large expenditure, or you just want to have money, you want to invest it, but you don't want to tie it up until retirement. And with Betterment, so as you are going through the process of opening your account, like they'll ask you all these different questions based off your goals. And then they'll ask you, like, what is your risk tolerance? Like, what are you comfortable with? Basically, they're asking, like, how much can you stomach to lose without freaking out, is essentially what they're trying to get to. So based on how you answer all of these questions, that is what then will determine, how are you going to invest? How are they going to, what type of portfolio are they going to build for you? And that's where these expert built curated portfolios come in, based off of what you're looking for, what you're comfortable with, what you're trying to achieve. So once you answer all these questions, and all of a sudden there it is, it's like, all right, I'm trying to do this, 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 and this. And like, all right, well, based off of your answers to our questions, this is the type of portfolio that's going to be best for you and what you're trying to achieve. And so I just really love that approach, because it takes the pressure off of having to pick and choose and build custom portfolios. All you have to do is figure out, what is your goals? What are you trying to do? What are you comfortable with? And then Betterment will take care of the rest. Now, for many of you, the idea of opening an investment account with a Robo-Advisor, where you're doing everything online and you're not talking to anybody real, like that's still something that you're struggling to get comfortable with. And I totally get it. It's one of those things like, yeah, I can order off Amazon and it's no big thing, but like, to open an account where I'm actually giving them money to invest it and hold it, especially large chunks of money, that can be very intimidating. So how do you get around that? And that is the special offering that I do believe that Betterment was the first Robo-Advisor to offer this. So going back, I mentioned earlier about the different pricing plans, where you have the core plan, their basic plan, which is 0.25% annual fee. Well, then they have this other plan that is 0.4%. So it's just 15 basis points higher. What is that? So with this type of plan, you do have to have a minimum of $100,000 to invest. But what do you get with that? Well, what you're getting, and this is like a big deal, you are getting unlimited calls and emails with their team of CFP professionals, so certified financial planners. They also share here, you'll get in-depth advice on investments held outside of Betterment through their team of CFP professionals. Also have the checking and cash reserve. So for those that maybe you don't know this yet about myself, so I am still a certified financial planner. I still have that designation. A CFP, to talk to somebody that is a professional, like a legit professional on all things investing and financial planning, and you get access to that. And if you recall at the beginning, I mentioned about what is the average fee that advisors charge to handle or to manage your funds. Like 1% is a very common, and that's about the middle of the road. There are people, as I mentioned, that are going to charge you more than that. So the fact that you can basically get that and you're still saving a ton of money, because instead of paying 1%, even having access to a team of CFPs, you're still only paying 0.4. So it's still 60% less. And you're getting everything they're getting with Betterment. So you're getting custom built portfolios, but you also get access to their CFPs. Now, I will, on this one here where it says the in-depth advice on investments held outside of Betterment to their team of CFP professionals. I mean, that's awesome that they're willing to do that. But just so you know, the reason that they are trying to do that is because at the end of the day, they want you to transfer those assets in so Betterment can manage them so that they can charge them, which could be totally fine. I don't think they're going to like any high pressure sales, but just so you're aware, like, I mean, that is the incentive, because when I was an advisor, I would always, but I do want to see what you have, because it doesn't really make sense to make recommendations based off a limited piece of information. So if you got $100,000 at Betterment and you've got $500,000 somewhere else, it would behoove them to want to know, okay, well, for us to recommend how to invest with the money here, it would be very helpful to know how are you investing outside of here so that there is portfolio synergy with all of their investments. So, I mean, that is the other part. But at the end of the day, like, they want you to transfer it in because they want to manage it. They want to bill you for that fee. It's still cheaper than what you're probably paying with the other advisor, but that is ultimately what their incentive is. All right, let me now take you behind the scenes of a Betterment account. So this was an account that I set up for my wife years ago. And if you're wondering why I set it up for her, so back in the day, whenever I was a Betterment affiliate, they had this thing where you couldn't have an account if you were a Betterment affiliate. I don't know why. Every other investment platform I've ever been an affiliate for, they didn't care. So I opened an account and then I closed it down because they told me to. But then I just opened an account under my wife's name. And initially I set this up for the Grow Your Dough Challenge, which that was this challenge where I basically set up all these different investment accounts with all these different investment platforms, put up $1,000 in, and then to see like which one was going to outperform over time. And since then I've closed some of those accounts. Some of them are still going. But that's where this came from. So I wanted to see this one here. As you can see, the total balance right now is $1,309. And let's just go ahead and click on the performance detail to see when this was invested. So this was back in, this is January 2019. So somewhere in there is when it started. So basically so $1,000 back in 2019 is when I started. And then looking at the portfolio, I think I did like a 90-10, which was basically 90% stock, 10% bonds. I didn't really give it a very great nickname, but it is the general investing account. This is a taxable account. Did not set up a joint account, which would have been the right thing to do. Oh yeah, that's right, but I couldn't have my name on it. So here is the current holdings that I have in this account. We've got the U.S. value stock, 6.2%. We've got U.S. value stock. So if I click on this, you'll be able to see the actual ETF. That's the one we saw earlier, the Vanguard Small Cap Value ETF, symbol VBR. And this is the entire weight. Now, there is one thing. I do want to show you one thing. So if you notice, like, everything is pretty well evenly weighted for the most part. But the two that have the largest weight, we've got this U.S. Total Stock Market, which is the Vanguard Total Stock Market ETF, symbol VTI. And then we also have this International Developed Markets, which looks like a combination of the Vanguard VTSE Developed Markets and also the iShares Core. But overall, 21.9%. There's also this emerging market. And I want to show you this because let's go back to the performance. And we look at the performance of how this is performed. Now, the time frame we're looking here, right? I mean, up until this last few months, I mean, it has done very well. You can see this was the mini bear market that we had back in 2020 that lasted like 3 months. And now you can see the sell-off here recently. So it does give the annualized return of 30.9%. But now that is the rate of return of this portfolio, which like I'm not upset about. Like, that's actually good. I made money, right? I've made 30%. But they also give this ability here. Actually, let me move myself out of the way so you can see this. So if you want to compare your portfolio to maybe a more conservative portfolio, maybe a more aggressive, I want to look at 100% stocks. But what I do want to compare it to is the S&P 500. And the reason being, so check this out. Once I do that, if you can see here, so the black line is the S&P 500, and then the blue line is my portfolio. So the S&P 500, in the same time frame that I've had my Betterment account, which is 90% stocks, 10% bonds, the S&P has averaged 55.6% compared to 30.9. And it's like, wow, okay, well, that's a pretty big difference. So if we go back to the actual holdings, like the holdings here, and we look at what is the reason, it is because of the international stocks that are included. It's these two ETFs primarily. Now, I will say over the long term, when you incorporate international into your portfolio, you should see more return with less risk or less volatility, less fluctuation. It just so happened in this time frame, the S&P has just done so amazingly well that actually by having international stocks in the portfolio, that actually has brought it down. Now, is that good, bad, or indifferent? It's not bad. It may be like disappointing. It's like, oh, I could have just had the S&P and did better. But just so you know, like when you look at all the different studies that show what does having international do for your portfolio as a whole, it should add more performance. And we're talking maybe like 1 or 2% more, not like 10% more. But, a 1% greater return over 10, 20, 30 years, depending how much you've invested, could be tens, if not hundreds of thousands of dollars. Now, other things that you could do in Betterment. So if you wanted to personalize your goals, that's where you could do here. If you want to add out retirement goals, maybe any other sort of safety net type goals, you can do that here. You can also connect your accounts. Now, I've not done this through Betterment. This is like where basically they want to help you manage or give you advice on your accounts held outside of here. Now, I will say I have been curious to see how does this compare to something like Personal Capital. I don't know, and I'm not really talking to anybody that actually is taking advantage of that. Just so you know, like it is an option, like it is something that you can do. But when you start looking at like all the different charting and everything, I mean, you're not going to have that like you would in a online broker that specializes in like trading, because here we're not trading ETFs, we're not trading stocks. It's a managed portfolio that basically is taking care of it for you. So if you are the type of investor that wants to buy Tesla stock, Facebook stock, any individual stock for that matter, like Betterment is not a good fit because that's not a thing that you can do, that they don't offer that. Now, if you want a managed portfolio that requires no thinking on your part other than answering questions, then like that is where Betterment fits, especially when you think about them charging what they do 0.25%, unless you've got over 100K and you want to talk to a team of CFPs. And then even then you're only paying 0.4%. So super low fees and a ton of offerings. I hope you enjoyed this review on Betterment. Once again, for those listening to this on the podcast, if you want to see what I was showing on my screen, head on over to the Good Financial Sense YouTube channel so that you can see what Betterment looks like behind the scenes. I didn't even show you the app. Like the app is like just as cool than like with a desktop version. So, I mean, it is super slick, super easy to use. And that's why Betterment has over $30 billion in assets, because of everything they have poured into this to give investors what they want, but make it simple, make it easy, and just make it stupid easy to use. Like that's what I need, right? I need something that's stupid easy. All right, stay tuned, because the next video idea or content idea that I want to do is a review of, we talked about M1 Finance before, but I also want to look at the difference between Betterment versus M1 Finance. Like which one of those is a better fit depending on what you're trying to achieve. So stay tuned for that one. That one will be coming up. All right, y'all, until next time, this is Jeff Rose reminding you that it's your money, it's your life, and only you can make it awesome. Until next time, peace.